Hey friends, how you doing? It is the final hour of expiration. There should be another word there. It's not the podcast. It is the experiment. It is the trial. And today has been a remarkable day. Unbelievable. You know that we are officially in a recession, right? Yet today we are from the bottom. Let's see. Where are we from the bottom? Come on. We went as low as 40.81 and as high as 41.33. Wow. Over 50 points. That's my math, right? 50 points. In a recession, we went straight up. And same yesterday, only we went up even more. Yesterday, we went up 100 points. Actually, that represents even more up because I believe we were up overnight. And this is just absolutely remarkable. We are in an official recession. I guess that depends on who you ask. If you're with the government or the Fed, we're not in a recession. Oh, no, no, no. No, no longer does 2 successive negative GDP quarters equal recession. No, because we now have the new math. Just like they have the new inflation gauge. The new inflation gauge is PCE. Used to be CPI, and actually even CPI has been compromised, but PCE is the one where they put all the heuristics and look backs and this and that and the tweaks and everything to try to make inflation look as low as possible, and they still can't get it below 9%. Darn. So now we have half the inflation that we actually have, and we have a recession that's not a recession. And we have a government that's telling us that this is the best economic condition that we have ever seen. Every single major economic report for the past, 6 months has been on a steady decline and accelerating. Every single one. Sure, occasionally you have one that might meet expectations or blip a little bit above it. But in general, other than that, everything has been worse than expected and going straight down. Yet we are to believe that this is the best economy that we have ever seen. Of course, the argument is that, well, employment, it's still rock solid, right? Well, get a clue because every recession starts that way. Every single one. Employment is a lagging indicator. And even that, if you look at the actual numbers, the jobless claims, they have been steadily rising for weeks. Not a lot, little. That's me rising. A little bit every week. And now that we are officially in a recession, although with the new definition, I don't know, all these companies now, they're going to look at that and say, should I make my hiring, firing decisions based on this new definition of recession or the old definition of recession? Which should I do? Oh, I don't know. How about if I flip a coin? Companies aren't going to do that. They're going to start freezing and laying off in order to protect themselves for the oncoming and what they know will be coming. And besides being in a negative GDP for the second month in a row, we also have high inflation, which is really unprecedented. Typically, when you go into a recession, the inflation rate is relatively low. You start going into a deflationary environment, and this is different. This is something that we have not seen since, late 60s, early 70s, something around there, some really bad. Yet, if if you tell somebody a lie often enough, or you tell somebody anything often enough, they will eventually believe it. I guess that is the tool of the Fed. That is their number one tool, and that is their narrative. They are going to keep on telling you that everything looks good, smooth sailing, smooth landings. Very soft landing, no problem here. Yes. As K-Dog is pointing out, the White House has their definition, but it's not just the White House now. Because, of course, Janet Yellen is repeating it. Now the mainstream media is repeating it because they are the lapdogs of the White House. And now, yesterday, in Jerome Powell's speech, he also reiterated it. And, of course, if you watch the press briefings every day, they are spouting this new definition that we're all supposed to now believe. Alan has his rose-colored glasses. That's cool. Where do I buy one of those? Some of those? Right out of the Nazi regime playbook. Well, actually, this is, I wouldn't say Nazi. I would say Marxist. Marxist is a far more accurate description. So, we're here to potentially do a trade. But you look at this market and you're wondering, what are we going to do? What are we going to do? Because no one really knows where the market should. Actually, I can tell you right now, the market's going up. Yes, we have the worst economic conditions in 40 years, but the market is definitely going to go up. And that is because the Fed is committed to accommodative monetary policy. Oh, wait a minute, Ernie. What do you mean accommodative? Aren't they doing quantitative tightening? Isn't that what everybody said? Quantitative tightening, right? Yeah. Quantitative tightening, right? I mean, that's the word, quantitative tightening. All right. So do the math. 9% inflation. Actually, it's much higher than that. You increase interest rates to 2.5%. Let's see. That's a difference, isn't it? That sounds like a difference of 6.5% still inflating. So does that mean that my money is still losing value? I'm doing the math correctly, am I not? Oh, all right. So we got a wise guy here. Vadim wants to know, would 3 consecutive quarters with negative GDP make it officially a recession? Asking for a friend. No, I do not think so, because even then they will have an answer for that. And even more so because, we have the November elections coming up, and the next GDP reading is going to be in September before the elections. So we have to deny. That is the oh, actually you have oh, geez. Okay. We have a bunch of jokers online here. All right, so now we have to pick a direction. We have to pick a trade here. Our track record on this second 50 trades has not been high win rate. We're still winning, even though we've only won 2 out of 8. Imagine that, just 2 out of 7. One no trade. So we've won 2 out of 7. We're still winning. All right, so that's okay. I mean, that's not okay. I mean, I'd prefer to have, say, 5 out of 7 and just be wildly profitable. But we are 2 out of 7, and we are still winning. Let me bring up the spreadsheet so you can see that of the logs. Okay, hold on a second. Final hour. There we are. All right. So here we are. We're still up $113. We are total of 7 trades, 5 losers, 2 winners, and all this stuff. So, okay. So we're still doing okay. Largest winner, $314. Largest loser, $91. So that all looks good. What we really need is another win and start getting us to that high watermark. We want to beat the high watermark. Let's see here. Oh, I'm not showing it, am I? Here. There we go. So here's our trade log. This is the results of the trade log. Here's the trade log, the trades that we've made. 2 winners, 1 for 59, 1 for 314, and all these small little losers. So we're still doing okay. Only a 29% win rate. Ah! So that's the power of asymmetry, by the way, when you bet small and look for big wins. So let's see. Let's take a look at the charts and see where we're at. Holy moly. See, at first the market went down on bad economic news, and then it went up, then it went down again, then it went up again, and it just kept on going up. Then it came down, and then it went up really hard. So this is all on really bad inflation busting news. Not inflation busting, inflation enhancing news. Right? So this is the result of having more inflation. And let me tell you why the market is going up. You would think that, oh my God, Ernie, more inflation, more bad news. See, now the Fed has a choice to make. Do they fight inflation or do they keep people employed? Inflation or employment? And that really means that you have to now, it's like you have a pendulum, and on one side is QE, and that is accommodative monetary policy, where you are printing money, helicopter money, and then you have on the other side QT. That's where you are a hawk, and you would have restrictive monetary policy, and you're doing the opposite of printing money. You are supposedly reducing the balance sheet and increasing interest rates for the purpose of killing demand, as if demand is the problem. See, they're coming to the realization that demand really isn't the problem. No, it's all the underlying crap that they've been doing for the past 10 years of monetizing debt. Monetizing debt is the problem. But no, it's Russia. I'm sorry. I've got like evil and good on my shoulders, and I've got one saying, no, it's monetary. It's the monetizing of debt. No, it's Russia. No, debt. Russia. What am I going to do? All right. We are going to take another low risk trade. Some people call it a low probability trade. I don't like calling it low probability because people hear it and say, well, if it's a low probability, why are you even trying? That's because there's also, with a low probability trade, there's virtually no chance of us losing a lot of money. All right. So that's what we're going to do. We are going to, and what are we shooting for? We're shooting for the top of T1. What is T1? I mean, T2. T2 is this value node. And you can't really see it here. So I am going to bring it into view so you can see it. Let's see. Let's go to a 4-hour chart and readjust this so you can see T2. All right. I'm going to make it yellow too so you can see it. T2. Well, let's make it. Yeah, yellow. There's the T2 value node right there. We have entered it. We are in its grasp. What does that mean? That means that there's gravitas here. There's value here according to the market. This is just a jumping off point. Our next jump off is into the huge volume well number 2. We just passed through volume well number 1, right? We passed through volume well number 1 after horrific inflation news and GDP recessionary news. That is how much this market pays attention to actual economic data. That is how important it is to listen to and read and analyze economic data, because that's what makes a market go up. Highest inflation in 40 years and a recession. That is what makes markets go up. All right? We have to rewrite the book, just like the White House is rewriting the definition for recession. Now we're in, this is T2, the T2 volume node. That's what we call it. See, we name them T0, T1, T3, T2. This is T2. And T2 is kind of bifurcated, has forked tongue. See, forked tongue. And if we get above that area, actually, it's this little line here, which is a low point in volume. You might even say it's a little bit lower than that. We could make T2 a little wider. When I first drew T2, I didn't make it too wide because I figured, there's a little chance that we're ever going to get up here. But see, T2 should be like right there. There, that's a better, there's T2, right? And so when we get to the top of T2, and if we break through this LVN here, and I guess there should be another LVN. Let's see if we can map this out. Yeah, there definitely should be another LVN. Let's copy and paste this guy here. And LVNs are low points in the volume wells. They're very significant. They are going to provide some level of resistance to price going up. So there's another one. And we have this little child node here that we're probably going to have to deal with. So might as well draw that in, because I think eventually that's where we're going. Yes, hugely bad economy, but that's where we're going. We're going up. All right. So this is going to provide a little bit of like a little island out there. I don't know how strong it's going to be. Let's make it subdued. We'll make it skinnier and darker. Yeah, something like that. No, let's make it a different color now that we're going north. Yeah, there we go. All right. Now, let's zoom in and see what we got. This looks like it should be going down right there, right there. And this guy here looks like it should be like right there. There we go. These lines are significant. Take my word for it. All right. Now we'll zoom in on that area. See, here's our new, we're going to call this one, I don't know, T4. But we haven't named it yet. We'll name it on Monday when I redraw all these charts. But these yellow arrows represent my new strategy for the market to go up. All right. And that's the new strategy. There's this strategy. If that doesn't work and we get turned back by this LVN at 4170, then we're going to come back to the center of T2, garner a little bit of strength. Then we're going to go all the way to the bottom of T2, just, to shake out some loose hands. And then we're going to go for it all with a little bit more momentum, and then attack it and then go. And then, of course, we have this LVN to contend with, and we'll have to get up here. But we can't do all that in like one day. That's probably going to take a few days, maybe 2. Maybe, who knows, maybe overnight. Overnight's a good time to do this stuff in the dark. Let's see, we got a comment here from Alan. They say there are all these jobs. Why are people not taking them? People out of the job market, or the jobs suck. No, the jobs are phantom jobs. They're just up there. See, a lot of people are switching jobs and stuff, but right now they don't want to switch jobs because they're afraid if they switch jobs and then they're the low man on the totem pole. I'm sorry, the low person on the totem pole. And they will be the first to go if they do, a job evacuation. So I think that's probably the reason why people aren't hopping around on jobs right now. So we have, let's say, job velocity has decreased. Right? That's a new economic term, job velocity. So soon, all of these companies are going to say, okay, we've got recession here. As soon as they've realized that the new definition of recession doesn't work for them, and they're going to start tightening their job hiring, freezing it, and then start letting go of people so that they can reduce their risk to the oncoming recession. Even though the market's going up, yep, we can have a recession with the market going up. So I think the play for today is near the top of T2. T2, I like that, T2. near the top of T2. It sounds like a foreign language. The top of T2. Say that 10 times fast. The top of T2, the top of T2, the top of T2. All right. Let's set this up. I'm going to bring over, hold on. There we go. Okay. I think that 150, let's look on the chart here. Let's zoom in on that chart and see if this looks good. 150 is right about the top. That's the center strike I'm looking at right there. So right around there. Let's zoom in on this chart. All right, so now we get a nice view of this. This big yellow line, that's T2. And 150 is right here. There is 50 minutes left in the market. All right. Now the question is, are we going to go up here or are we going to retrace to near the bottom of T2? Top of T2 or bottom of T2? That is the question. Well, it's end of month. I don't know. I don't know which way to go. I don't know. Do we have any ideas here in the peanut gallery? I know there's more of you out there too. You know, weigh in. Top of T2 or the bottom of T2? So that would be a, I would say that like right here at 115 or 150. Both seem like they're really far away. Maybe we should play a little closer to the vest with something narrower. Oh, okay. We got our first vote. Tim Dodd says, go long. Is says, end of month, big earnings in tech, go up. Go north, young man. All right. Let's see. Yeah. And Kevin saying 4150 has tons of liquidity. VIX is strongly negative. Top of T2. Okay. Look. Oh, of course. Here's the counter argument. JP says late Friday sell off. Clayton saying 4130 is his bet or her bet. Their bet. I hate this world. K-Dog, recession is bullish. That's because we're in opposite world. All right. I think the consensus here is to go bullish. Let's bring back. But maybe 10 wide is too much. You know, why are we risking that much? Maybe we go down, yeah. Like that. That's not risking much. Maybe we go a little closer. Let's go a little closer. Yeah, I mean, $50 to make 450. That's not bad, right? Yeah, I can do that. It says 60. Let's try 55. Let's see if we can get 55. What is that? There we go. So there's the bet for $55 to make 445 minus commissions. All right, so they're going to want to know in here. It is a bot, a butterfly, call butterfly at 4110, 4115, 4120 at a limit price of 0.55. I just put that into the chat. Come on, baby. We need a win. We have to increase that win rate to 33%. Oh, you're welcome, Greg. Not sure what I'm being thanked for, but that's good. So I moved it a little closer, narrowed it up. I wanted a super cheap bet. It's about a 1 to 9 win to, let's see, let me do the actual math here. I'll do the math right here online so everyone can see what I do. All right. The way we do this is we look at how wide it is. It's 5 wide, so that equals $500. We subtract how much risk that we're taking, and that's $55. And that equals 455. Then we divide by that risk to get our risk to reward. And our risk to reward is 8.1. So it's 1 part risk to 8.1 reward. That's how we get our risk to reward. Generally, we want to do, at the minimum 1 to 5, but we're usually looking for 1 to 7 to 1 to 10 or 1 to 12. Occasionally, we can get in a trade for like 1 to 15 or something like that. And there are some cases where we've actually gotten in, 1 to 20 and 1. All right. So it's that's with the SPX, by the way. Uh-oh. K-Dog's saying he thinks I typed it in wrong. Oh, yeah. I said 410. It's 4110. You're right. Well, no one's going to put on a 410, 4115, 4120. So yeah, that's not going to happen. Yeah, I think everybody knows. Maybe I'll do it again. It is bought a call butterfly at 4110, 4115, 4120 at 0.55. That look good? Might be able to get a little cheaper right now. All right, so let's put the box up at 4140, 4150. We have to compensate by the difference between the SPX and the E-mini. Currently, the SPX is at 4130, 4133, and the E-mini is at 4132. So it's a 2-point difference. You see that? 4130 and 4132. Yeah, just about a 2-point difference. So when we put it on the ES, the reason why we put it on the ES is so that we can look at the volume profile. All right. And so we're going to put a box here that's going to end at 6 o'clock. There's 6. Oh, that's 6:03. And we're going to make that box like so. Let's make it nice and thick. We'll make it the color of Thinkorswim's. All right. And then wow, is that like almost right on? No. It's at what were the coordinates again? 4140, 4149. Is that what I made? Did I do it right on the button just like that? All right. So there it is. There's the target. Let's make it 1 minute to make it appear as if we have more target. Mo better. And then let's increase the volume profile to add to the fun. So it looks like we can see the volume coming in. You know, we love to see the volume. That's good. Let's make it nice and wide and bring it over. There we go. All right. Now we're all set. Let's make it taller too. There we go. Yeah, I like that. Oh, sorry, Dougie. How you doing, buddy? Dougie. Let's see. Hey, Obi. Hey, look. Yes. Couldn't get him in focus. Camera has to see his eyes. All right. Let's see where it's at here. We're, skating on break even. We need to start moving up. So right now the break even's at 31 and I don't know, 56. Let's say 32 and it's like moving too much. Let's say it's like right there. It's at about 31. So what I do here is I create another box like this. I make this one narrower and I give it a different color. The color of profit, the profit line on Thinkorswim. Maybe too wide. And we'll put the bottom at 31. Oh, 31 was right. here. So according to this, we're in profit. No. Oh, we have to add 2, right? 33. And we have to add 2 to this one too. Yeah, that was my bad. There we go. We're still in profit. According to this. Just a little bit. All right, we're making a move up. Come on, we got to break to a new high. See, we're a little bit in profit right here. We can put this in its own grouping, like 0 DTE 3. So I'm up really tiny today, only $60. But this one's up. Says it's up $12.50. It was up higher than $60. That doesn't seem right. That's okay. Whatever. It's not negative. All right, look at this. We're moving. Must have broken a new high. Let's check out that new high. Oh, yeah, there we go. Come on. Like, come on. We need center strike. Yeah, I'm sorry about that, K-Dog, but I did announce it quite a while ago. And it actually retracted, so there was even a chance to get in at a slightly better price, maybe 5 cents better. Come on, baby. We really wanted to end up like right there would be ideal. Somewhere around there. That's probably a little low. Maybe right there. And I don't care if it does it now or right at the very last second. Last second is more exciting. That's what we had about a week ago. The last second win. So even if I lose today, I will still be up. All right. And we will be 25% win rate and still be up since starting. Not that that's what I'm shooting for. I'm just saying. Show the chart, please. Oh, okay. Oh, that's right. I'm not showing the chart. There we go. Yes, production quality is low, but you're not paying anything, so. Yeah, still up even. Oh, I get the hiccups. Even if today is a loss, we're still up. But we're ahead right now. And yesterday we were up, and I was up 100% yesterday, and I didn't take it. I could have taken it. Because it looked like we were going there. Come on, new high, new high. All right, Tim Dodds doing paper trading. Just to let everybody know, every trade that I've been taking, it has been real money. So just to let you know that I've got skin in the game. And when I say skin in the game, I'm referring to the podcast I did just about an hour ago. You might want to go listen to that. Put it on your favorite podcast player. Podcast 0 Days to Expiration, available on iTunes, Spotify, Amazon, iHeartRadio, etc. It was episode number 99. That means that next week we are going to hear episode number 100. Oh! And I should also remind you all that on the YouTube channel, this YouTube channel, we hit 10,000. We are now at over 10,000 subscribers on YouTube. And we are officially the number one zero DTE YouTube channel. And currently the number is 10,052 subscribers. So if you're not subscribed, you should be subscribed. Hit that subscribe button right now. Go ahead, hit it. You should hit it if you want to get notified of these trades and learn more about zero DTE trading. So where am I now? Not enough profit to take. We're not close enough to expiration. We're only at $10, $15. We need to be, yeah, and it's still half an hour. There's so much time to go. So this is end of month. I would imagine that the institutions and the investment houses, they would like to squeeze out the best possible win possible. Because it looks good. Maybe they have bonuses on the line here. Says we're up 1250, 1750. See, there we are right there. All right, so this is now sitting at 4132, which would be 4134, 4135. So I just want to adjust that a little bit. All right, so that's more accurate now, right there. Kind of kicking myself for not taking that profit yesterday at 100% and didn't take it. So if we make a new high here, I think that's probably good for at least 3 or 4 ticks. And that might get us into there. Because they get all excited. You make a new high and they go, oh, they step on the gas. So who's out on the chat? I mean, are you out there? Some of you have already chided in. If you haven't said anything yet, tell us who you are and where you're from. That is correct. I did not do a last hour trade yesterday because it was too crazy. It was a crazy day. Hey, Shreems, how you doing? Is that it? I know there's a lot more out there. There's probably like 100 people out there. K-Dog from Ohio. Kevin from the Fritz. I mean, from the Northeast. I am also from the Northeast. I am from Sharon, Massachusetts. Oh, look at this. We're going to enter. Come into my parlor, little sweetie. Tom from Cali. All right. And Tim from Smoky, Idaho. All right. So there's 26 minutes left to go. We are in the profit tent. We are in. Ugh. 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 What is it good for? All right. This is Kevin's trade from earlier. Get out of here. Really? Yeah, but what did you pay for it? Or is that a 50-cent limit? I couldn't tell. Jamie says, filled a 41.25, 41.50, 41.75 fly this morning for $2 when the market pulled back around 4,100. Sold it for $9.45 for a $472 return. Pat that man on the back. Oh, I'm sorry. There you go. All right, where are we in the profit scheme of things? We're almost in the profit tent. We're at so about 50% right now. Well, a little under. Did I say 41? Damn. Another production mistake. Well, you can see the trade. There it is. It's right there. Right? That is the trade. And then let's go to the that's because I didn't copy it. I just did it through my failing eyes. So there it is. It's 41.45. So whatever I wrote was wrong. All right, we're above 50% profit now. But we need to get in. Get in. We need another new high. Let's make the wrong one. Let's make the volume profile even bigger. Make it ominous. Like it's the blob. It's ever growing. It might be. It might be too early for a rain dance because we have a lot of time left. We have 21 minutes to go here. What we really like is for it to get up inside here, right in the middle, and then just start, kvetching. Oh, is it going to fall? We don't want it to fall. So you might get like institutions saying, "Yeah, I'm out of here. Weekend. Let's take the profits," and then it drops, right? Somebody's going to call them up and say, "Hey, we're online. We're watching you." See, Vadim, you had to mention the damn rain dance. It's all your fault. Rain grooving. Let's see. I have other sound effects here. Maybe some of those would help. No, that doesn't work. How about I like that. What other sound effects do we have? Oh, that hurt. That's good. I know that this is the wah wah. No, that's not. This one is. I got all the tools here. All right, we got some other tools that are cool. We have the voice changer. The voice changer. Hello. I don't know what this is. That's reverb.
Hello. Come on, market. You can do it.
I need Kramer's button. Bye, bye, bye. No, I do not want to be associated with James Kramer. What we need is another new high. That's what we need. See, I think these are profit takers coming in here with all this volume. Otherwise, it would be moving up. Oh, yeah, they're coming back in. There we go. See, lock in your profits, then lock and load again. Push it up. Come on, let's go. All right, where are we in the profit scheme of things? I might just take the profit. I really want to get inside the profit tent. Not enough yet. We're, well, 30, 25, 30 bucks. That's not bad. That's 50%. The other day, I gave up 100%. Come on, just another new high. Another new high will do it. What we really want is another pin trade like we had about a week and a half ago. Final minute, it went from 0 to $300 and something. That was awesome. Well, I feel it now. I feel like there's going to be a surge here. That wasn't a very good feeling, though. That was a horrible feeling. There's a little less than 14 minutes to go. So what you need to do here in a case like this, there's every possibility that this could start really running and go right through. So you have to be prepared. You must be prepared. So what I'm going to do is I'm going to move this out of the way so you can't see, so I can get prepared to take a profit just in case. I don't want it to run through and then miss. All right, so just going to create a closing order. Less than 12 minutes to go. Just make another new high and then establish that as your support. That would be wonderful. That's my order. All right, Iz. Good for you. Glad somebody's listening. Get your profit taking order ready. Come on, new high, new high, new high. I mean, it looks like they really want to do a new high. What could be preventing them? That's right, Iz. That is our motto. We manage profits, not risk. I think I have to back this off a little bit so we can see the price action too. It made a new high while I was doing that. Right at 41.44 it went to. I have to back this off again. For a second there, I hit 100%. See, now we're in a loss. So they all came in and they dumped. So now we need a new batch coming in. Geez. So I think like they lock in their profits and then they go for more. There's less than 6 minutes to go. Is it going to be a sell off? That's just so disappointing. Bunch of wusses. They're all dumping. They're all dumping. I don't blame them. All right, 3 minutes to go. Two minutes. Look at them all. Look at all that volume just right at this level. Just it's making all the other volumes look small. So what will probably happen is it'll close below the high, and then the futures will continue moving up because they don't close for another hour. One minute. course, this is what happened the last time. 1 minute to go and then whammo. But I don't think it's going to happen this time. Yeah, we can take the purple off. It's not going to do anything. It's either do or die. All right, so watch the futures. It's probably going to go up and then pin. So right when I was switching up, it came almost near a pin at 1550 with 10 minutes left. Everyone decided to dump before the weekend. So they pushed it up just one last tick, and then they just totally dumped. And it looks like the majority of them dumped right here at 41.33. They brought it up to 41.44. Isn't that interesting? And then they just started to unload. All right, well, that's that. That was disappointing. You know, so that brings us our win rate down to like 25%, but we're still positive. But see, you know, what I was going for there is, you know, more or less we're going for these pins, quite frankly, or something close to it. Had we been even on the edge of, even not in a pin, but just in the profit area with a couple minutes to go, I would have taken that. I was ready. I had my finger on the button. And then I decided to move the volume out of the way so that you could see better. And then that's when they sold off. All right. So Kevin's saying, did not take profit as was greedy. Yeah. Need to stop that. Yeah. But you learn, you know. I think that on cases like this, you know, when you get like 30, 40%, just take it. What the hell? I mean, of course, if we were like deep into it, it would have been a lot easier. But I guess the strike just wasn't the strike that we needed. If we were down at, say, instead of 41.45 at 41.40, then we would have been in the tent for a while. And then it would have made the decision easier. So, yeah, pin is nice, but nothing wrong with a double. So really the whole purpose of this is a learning exercise. And I suppose, you know, if you take a few hits and you spend a little money and you learn from that, that's okay. But as I was saying, that we were really right there, man, just within a few minutes. Should have figured that though. It's a, you know, we'll learn about that. We'll say, okay, after this huge run up and right at the very last minute, they all decide to dump with 10 minutes to go. And that makes sense. Had I dumped right then, we would have had a double or close to a double. So that was second time in a row where I gave up a double. So that would have been about $27 profit. The other one would have been about, no, it would have been more than that. What am I talking about? Double minus there, about $40 profit. The other one I gave up was a solid double. That would have been about 45. So gave up about $85 in the last two sessions. So you got to think about that. You know, is it worth giving that up for going for a 10x, you know, an 8x trade? instead of instead of making $40, make $400. Huh. That's a tough one. That is a tough one. So you only get into that pin trade about 10% of the time, 10, 15%. Let's see. It says I was up 4 to 5 times, but sure was watching for that pin, then it dumped. Yeah. And it says with multiple tranches, why are you not making sure your tranches are up and showing a free ride? Because I was only one tranche on these. I'm not betting big on these. Now, if this were a regular day time trade, yeah, I would have multiple tranches and I would have been out with a free ride and guaranteed a profit like I did today. It wasn't a big profit, but it was still a profit. But with this trade at the end of the day that I am, putting out there every day, I'm not going to take huge risks on this. That just wouldn't make sense. So I'm only putting on a single position. I got in at 25, could have sold at $1.25, but it was right there and looked like it could hit the mark. Let me give you some advice. Don't do what I'm doing, right? I'm doing it for a different reason than maybe what you're doing. What I'm doing is I find an area where I'm pretty sure you can profit, and you should be taking that profit. Here I'm trying to debate whether I should be taking these profits early or not, because those little ones add up, but that would also take me away from those big profits, which is what really elevates the account. So, I mean, that's really what happens in these accounts. So here, let me give you an example of this. I'll show you my trade log from my my system account. All right, I'm gonna bring it over there. Hold on. All right, now I took a trade today. I haven't entered the trade yet, but it was a winner. And let me show you that chart. All right. So today's was a winner. Let me just get the numbers in there so that I can update that. $29. Let's see what I entered at. Sorry, I got to get everything out of the way so I can see what I'm doing. Let's see, what trade was that? All right. That was this one. I entered at $3. Oop. Exited at $8.75. I'm sorry, what was that? Can't read it. No, $8.25. That was a 6.1 risk to reward. And that was one contract. All right. So that was today's, but I also had a loser trade today too. And that one was entered at, where is it? There it is. All right, there were two trades, one for $1, one for 75 cents. So that's an average cost of $1 plus 75 divided by 2. So at an average cost of 137, 1.375. Exited at 0. The risk to reward on that was about 10 to 1. It was actually 9.4 to 1. Outright. And there were two of those. All right. So my net today wasn't too bad. A little over $200. All right. And so what does that look like here? All right. I have to adjust this to include those two trades. All right. And then this guy here. All right. All right. So as you can see, we've been going kind of sideways for a little while, but we're near the all-time highs, since I've been taking these logs 38 days ago, started 38 days ago. And my win rate is only just under 44%, profit factor 1.74. And what I want to show you is the wins to losses here. Largest win 1100, largest loser 356. So there's a good disparity there. This trade here, I never should have taken it for 356. My largest, that was a total mistake. I never should have done that. It was only like a 1 to 3 risk to reward. I don't know why I did that. That was like crazy. And I like to say I'm just going to eliminate that. I can't. But let's take a look at the log, and you'll see, if you take a look at the log closely, you'll see there's a lot of red in here. All right, but then the winners, there's a couple of small winners, but then there are these other ones that are meaty winners. All right, and that's what propels the account up. All right, and then you can see the return distribution is like that too. So we have all of our smaller winners. The losses are, frequent. They're down here. And then the winners, most of them happen in this sort of mid-range. And then there's this sort of long tail outliers that happen. And that's what we're going after. We're going after that long tail distribution. And then this chart over here is showing the risk to reward frequency. So most of if you were to average all this up, it comes out to about 9.9% or 9.9 or 1 to 10 risk to reward is the average. But most of them are definitely in the 6 to 7 range, 5, 6, 7. I'm trying to eliminate these down here. I'd like to eliminate them completely and move the meat of them up here in the 7, 8, 9 range, because I feel like that's the range where the risk to reward is best. So there's the stats on that. And again, I don't know why that keeps on disappearing. So eventually we're going to hit some, winners in a row, and we'll move up to the next level. Very similar to the way we started. We started off well, moved sideways, but this market has been really tough too. One of the toughest markets I've ever traded, and still we're doing okay. So that's all good. Drawdowns have been minimal. The biggest drawdown has been 2.2% of the total account equity, and that actually happened over here with one, two, like 3 consecutive losers here after a nice big win. Actually, the biggest drawdown was right here after just this hard time just getting through all of this. And now I've moved up a notch. So overall, good performance. Let me show you what, now I have a simulator that simulates all the stats that I've done so far. And with the simulator, I can simulate that size of an account. So I can put in all the stats here. I can put in, my risk to reward. Now I took the biggest winner and the smallest and the biggest loser off because they were anomalies in order to do the simulation. If I put the biggest winner on and the biggest loser, I would actually have it wouldn't be as representative. But anyways, here's it starting at $20,000, and after 500 trades, it more than doubles. So that's like after 2 years, maybe a year and a half. So after a year and a half, you double a $20,000 account. But that's on this instance. I can do multiple instances by recalculating this. All right. And this gray chart is showing you with a larger account, a $175,000 account, and trading a little bit differently. Trader 2 is trading just one contract at a time. And that's pretty much what I do. I would say that I'm closer to 1.5, but if I put it to 2, it's probably going to show you some unreal results. And I don't always trade 2. Just to show you how often I trade 2. So if we look at our log for trading, well, I guess I've traded 2 a fair amount of times, but not that often. Not where I would average 2. So I put in 1 to be as conservative as possible. So the simulator takes into consideration this long tail distribution and the skew that I'm averaging now. If I were to look at my current skew, where is that number? I don't see that number anywhere. I don't have it. I'll have to figure out the skew. But when I figured it out, it was around 4. And so I use that as the input to this guy here so that I get a realistic depiction of what I'm actually getting here. And so in the data, see, I changed the skew to 4. And then the mean, I moved it more towards this end of the distribution of data so that it shows, lots of losers and a good chunk of winners, but they're all in the low end and then with outliers. All right. So every time I do calculate, it gives me another instance of this and gives me, based on those numbers, a similar distribution and different data sets. So, any of these could happen to me. This is estimating, what someone trading like me would experience with this strategy, assuming you make no mistakes. And I've made a couple of mistakes, but those are outliers. But generally, you do this over and over, and you're going to get this type of performance. And it looks bad because you have lots of losers, but in reality, you're always getting a winning result. So, like, here's this result. Only 39% winners, right? Only 39% winners. And almost tripling the account. That's with one contract. All right. So it's it's providing pretty realistic results. Now, there are some times where, just like me going sideways, you look at this one here where I was up here, like, I don't know, $2,500, and then came all the way back down to the beginning, almost the beginning, right? Let's see if we can find an instance where it has a really bad start. This is a bad start, I guess. So after 37 trades on this one, it was only up $700. But then it took off. And then it had a big drawdown here. And then another one here. Right? So all of these things are in the realm of possibilities. I want to find one where you have like a really big drawdown right in the outset. Like, here's one. Now imagine starting this strategy, and you start off and you just, you make a little bit of money up front, a few $100s, and then you go sideways, and then you hit a low like right here, and you're down, $1,200 after how many trades? After 59 trades. And take a look at that. Look at the P&L column here, column B. And you can see that after 59 trades, you're like, holy crap, is this ever going to win? And then it picks up, right? And over the long run, it does really, really well. So, and no matter how many simulations I do, I haven't yet had one that just had, here's probably one of the worst that I've seen, where you have multiple beats. This would be tough to get through, but by staying consistent and keep on doing the same thing, eventually it catches a groove. All right. Oh, this one would have been a tough one. But again, it caught a groove and then went up. So it's a very realistic depiction, I think, of the simulating this strategy. This is all starting with a $20,000 account, usually ending up around a double or a triple. All right. This one's ending up at 70,000. Wow. This one. Oh, that's the gross profit. That's not where it ended up. But here in this middle column, here, that's 51,000. See that number right there, the balance on Trader 2. So I do this over and over again. 56,000, 57,000, 58, 51, 52, 75. There was a good one. 60, 51, 48. Yeah, well, that wasn't a double. So after almost 2 years, you did about 50% a year. So not bad. That's this strategy. That's using these parameters. That's with a 44% win rate. So that's how this simulator works. And see this one here that made, $48,000 was only 40% profitable. Yet still overall was a winning strategy. The key here is the drawdowns. Notice the drawdowns. Only 6.58% was the max drawdown. That is tiny. Super tiny. And that's because of the asymmetric trades. Right? So I just want to point that out. And so this current, run right now looks pretty good. It looks like it's right on track, that I'm doing with the group. We're currently up about almost $2,300. I don't know what everybody else is doing. Everyone does a little bit different. Most people are still learning the strategy. Some people are doing better than me. Some people worse. I would say it's about a third. Some are doing really well. Some are breaking even. Some are down. But if you look at the, you know, first of all, you need to learn the strategy, and then you have to get good at it, get good at the basics. Yeah, let me bring the big head on here. Oh, where is this thing? There we go. I have so many windows. All right. So, getting into this strategy, what I'm showing you here in the evening or in the final hour is not really what we're doing. Here, I'm just doing an experiment trying to find out more about trading in that final hour, which is different than what we normally do, where we're taking trades either right before the market opens or before noontime. And that has a completely different expectancy, different strategy altogether. Here, I'm just trying to test out what it's like to trade in that final hour. Some people like the final hour. And I think that if I had switched up my profit taking, that would change some of the results. But like I said, I'm betting super small there. I'm only trying to find out what it's actually doing. Now the actual system is what what I just showed you, and it's similar results, but I'm a lot more in tune to taking profits and being a little bit more cautious. I'm not, just throwing it at the wind, trying to pin all the time. As a matter of fact, don't get too many pins, but once in a while you get into a good profit zone and it makes money. So that's the goal on the other strategy it's a slightly different process. And that's really what it's all about. It's the process and getting good at the process and doing the same thing over and over and developing that discipline, getting good at the basics, understanding your execution strategy. And just do that. We're not outcome based, because I know that the outcome for this version of my life, going from now to there, it could have been different if I had started, in a parallel universe and started again, and I would have had a slightly different result. And I guess that's what the simulator shows, showing you all the different parallel universes of Ernie trading this system, given the same parameters. And you get different results. And that's going to be the same thing for everybody. You make slightly different choices, and then you end up with a slightly different result. But if you stick to the basic strategy that you've chosen and go forward, you should achieve those type of results. And it's all based on asymmetric positions. We take very little risk looking for outsized profits, and then we take the spectrum of wins or profits in between, from small profits to big profits. And we hoping that distribution of profits has long tail or fat tails, so that a small percentage of the time, approximately 10 or 15% of the time, we come close to a pin trade and make a lot of money. The other times we get these sort of the meat of the trades, where we're not making a lot of money, but we're doing okay, and that keeps us stable. That prevents us from having big drawdowns, and our drawdowns are never big. They're all small. I mean, if you are a trader, if a professional trader could go through his entire year and have less than a 10% drawdown, he would consider that, or she would consider that, a huge win. Huge. I can't explain how. In this strategy, I'm finding that I'm staying under 6 or 5% drawdowns, which is incredible. So far in this run of 38 trades, I've experienced a max of 2.2% drawdown. Not bad. So that's a great mark of it. The other thing that you want to look at is, well, what is your net profit as a percent of your drawdowns? Right? So that's really important. Your net profit as a percent of the max drawdown. So let's say that over the course of a year, maybe you could do it over a course of a month or over the course of a year. either or. They're going to give you different numbers because a cumulative profit over a year is going to be much larger than that 1 month. But let's do it over a month. And in my case, the biggest drawdown was as a percent of my net profit. Let's see. The biggest drawdown was 2.2%, and my my return so far has been about a little over 10%, about 12% in 1 month. So not bad. So my percent drawdown, my drawdown as a percent of my net profit is about 1 to 10, or about 1,000%. That's the number that I'm looking for. If you can do over 500%, you're doing great. If you're doing 1,000%, that's unbelievable. I think that's what you should be shooting for. And what basically that is describing is a small drawdown as or your drawdown is small as a percent of your earnings. And that's what you're after. And what that gives you is that kind of smooth equity curve. You know, it's not doing this. It's doing this. Right. And if you were to look at, if you notice the profit curves on all of those, that's exactly what you got. And the reason for that is because you're taking those small little risks. They never accumulate to enough before you come across a big winner that propels you up again. And that is the key. So again, if you'd like to give this a shot, if you're still watching, go to 0-dte.com/try for a 4-week trial. The reason why I do 4 weeks instead of 1 week like everybody else is that you need 4 weeks to get the full complement of the service. And like someone mentioned earlier, this is not an alert service. This is an educational service, and we're in it for the long haul. I am here to help people become disciplined traders and trade like a pro, taking asymmetric bets, small losses, huge outsized returns, and then anything in between. We become focused on managing our profits instead of managing our risk. Our risk is built into the risk that we take for that trade. And, you know, we're perfectly willing to accept 100% loss on that and then move on. If we have the opportunity and we know we can just, you know, take some of that profit off, that loss, we will, but it's not that important to us. We're still focused on those returns. And maybe I should be a little bit more focused on managing those profits on this final hour trade. We're doing a lot better, but here I'm still 25% win rate and I'm still profitable. So there's that. And I think learning from this, maybe that will be a change that I make on the coming weeks or we'll see. So anyways, that's 0 days to expiration, 0-DTE. Really important that you remember that, 0-DTE.com. I hope everybody has a great weekend. Thank you very much for hanging out with us and watching this trade. It's always exciting. And check out the videos that I did earlier, particularly, we got some really cool stuff coming in on the chat. We got to ban them. Hope everybody has a great weekend. Peace to you all. And that's it. We're going to get the music going.